Hey, Crypto Hotep here with another investing video. Um, we are on week 7 right now, so we always like to look back to see where we were at before we look forward. And if you see here, the balance for the family portfolio at that time last week was around 559 and 90 cents. Now, if you are unfamiliar with the family portfolio or my methodology behind the family portfolio, just swing on over to the channel, Trader Crypto Hotep channel, and go to the investment journal and watch the week 1 video. The week 1 video explains my thought process with investing for my family and with my family, and why we are doing this, and the stocks that they've picked, they being my family, have picked, and how we're tracking this. Just in a nutshell, very quickly, I had a short list of stocks that my family picked from, most of them dividend stocks, and because that's what we want to focus on, as I'm a big proponent of dividend stocks for passive income. And we use M1 Finance for tracking of our portfolio because it allows the system, or the software allows setting up pies for each person in my family. And within their quote unquote pie, they have their stocks that they chose. So, with that being said, and before I forget, none of what we speak about is financial advice. Please consult a professional before you are trading or thinking about investing stocks, crypto, gold, any volatile asset that you can think of. And now, with that being said, we can jump right in here. So 559.90 was that balance. We are currently at 599.96, and we are on the uptick. So the previous, we were at a negative over 2.5% rate of return, and at a negative $10, almost $10 there. Here we are in the green, up 1%, and a market gain of plus $2. I know that's not a lot. That may not be a lot to some of the bigger accounts here, but remember, this is a smaller account that we are building up from the bottom here. So we will take a green week any day of the week. So let's hop into the activity. From the last week here, we've had a couple things going on. So we have had a dividend activity, which is always good. We like to see dividends. We have a whole 3 cents. Again, I know it's not a lot, but it's more than what we had before, which was nothing. So 3 cents from McCormick, that spice company. They've been on a tear as of late, and I'll jump in there when we go to quote unquote dad stocks or my stocks here. Today we had a plethora of buys. So we bought Tesla for my youngest, Nintendo for my youngest and my middle, Pepsi for my wife, Apple for my oldest as well as myself, Celsius for my wife, Public Storage, which is for myself, and we'll talk more on that, McDonald's, which is for our oldest, Amazon, which is for our middle, myself, and then Costco, which is for my middle. So all in all, 9 buys. We went shopping today. And with that, we will go into the portfolio and see the breakdown here. So as we go to the portfolio, you'll see a lot of red, but when you compare it to last week, it's not really that bad. And I'm happy to say that as well. So we'll start from the bottom up here. We'll go to my wife's stocks here. As most of you are aware, if you've been following these videos, my wife's kind of been carrying the portfolio because of that Celsius position. Celsius was on that fantastic run. It's kind of teetered out now. I think it still has gas left in the tank, so I'm not really doing anything with that Celsius position of hers. And we're still holding strong here, down a little bit over 7%, but she makes up for it in Pepsi, which had tremendous earnings this week, up over 6.5%. Google, which is now a dividend stock. Amazing. up over a staggering 24%. Love to see it. Um, my wife's portfolio in general year to date up over 7% with a market gain of $1.85. Not bad at all. She is the only one in the green. Seems like per usual now. And now we can go to our youngest. Our youngest is bleeding out the most, it seems like, and that's because of Tesla, as you will see. We have Tesla here. Tesla was bleeding out the most last week with everything going on with Elon and the FUD that was surrounding there. Nintendo still down 12%. Apple still at a discount, down over 6.5%. Rate of return almost negative 9% with a negative gain of $2.59. I think Tesla is a tremendous value right now. So we will continue, as you saw in the previous screen, with accumulating Tesla for our youngest. Now our middle, we have a little bit better of a situation. Still down over 4%. Negative $1.25 in market gain. And the only one green right here, we have Amazon. Amazon's been up last week as well for our middle, and this week is the same as well. Costco and Nintendo down very considerably here. And then our oldest, as you guys know, our oldest has just two stocks, keeping it very simple. Mickey D's and Apple, both down over 5%. Not concerned by any means. And I still hold value to these stocks. These companies aren't going anywhere. They're going to be here. So I feel very good about this. And I feel very good about our oldest holding these stocks here. And then with mine, down over about 0.5%. So not too bad. I would say the technology sector was a little bit of a mixed bag, but up considerably versus last week. That's what I will say. Even though Apple is down in a couple of my family members' portfolios, it is up in mine. Got it at a tremendous discount. Google up 30% for that. That is a fantastic return there currently. Amazon up in the green, and then Broadcom. We are down over 26% with AMD. I will still be buying AMD all day, every day, especially with the AI push in tech. So not really concerned there. Industrials up, same as last week. Industrials, and I mentioned this last week, that industrials will see a push further into this month, maybe in the next month as well. Consumer staples, I call these my old reliables. These are going to be going up very step by step. These are all quality companies that have quality products that people will buy no matter what's happening in the world. So I think that these are very good companies, very good dividend companies. No big outliers here. No really big double digits, except for McCormick, as we mentioned, up over 11%. It's been on a tear from their earnings several weeks ago. Finance finally up a little bit. Restaurants and food is up. If I'm not mistaken, I believe this was from Texas Roadhouse and Domino's Pizza. Yep, Texas Roadhouse up over 4.5%. Domino's Pizza up over 11%, and McDonald's just like with my oldest, down over 6%. Starbucks down, trending down as well. I do like Starbucks. I feel as though it's at a discount, and I really don't mind holding that stock. Funny story about Starbucks. Their payment service has, I believe, some of the most active users in the world. That little Starbucks reward program that they have, it probably has the most people in it. And I don't know the huge statistics exactly, but I remember seeing that's that's really one of the main drivers of their profitability is that program. Um, and then we do have pharmaceuticals and real estate here. So real estate, as you guys know, keep it simple. Two stocks, Public Storage, Federal Realty Investment. They're split. One's green, one's red. Public Storage down over 8%. This little notation or icon here means that a trade will be happening. So I wanted to buy some more Public Storage as it is red. I love buying in the red here. And I like Public Storage. I do. And ironically, with that being said, we can jump right into the stock analysis. But before I forget, just closing out here, the family portfolio up this week over 1%, market gain of $2, cracking on $600. It seems like we just hit 500. Cracking $600 at $599.96. Still didn't do it yet, but we are on the right path here. And with that being said, I think this calls for our stock for this week, Public Storage. Public Storage is a stock, as you guys saw, in my real estate portfolio. I did want to have exposure to some sort of real estate companies, very less volatile. Uh, I feel as though because of their business model, they've been around over 50 years. They're the main player in the storage realm, and people know Public Storage when you say the name. And if you're not familiar with them, they are a storage company that rents or leases out storage spaces to individuals who maybe don't have space to store items like in a garage or in a basement. And no matter if it's a recession or pandemic, their business keeps moving. It keeps going. And that's when I'm looking at the stocks in my portfolio. It's one of the things that I also look at is how well they were affected or how bad they were affected by dramatic events that happen in life, such as a pandemic, such as a recession, such as a depression, whatever. In Public Storage, they weathered the storm considerably. So um, they are down. They've been down. Obviously, in the day, they're down 0.37%. I believe the year currently they're down 10%. And then 5 years, they are up 16%. Um, the quote unquote analysis consensus is a buy with a target of about 310, which is good. Their financials, little bit of a mixed bag to the outsider looking in. You have to keep in mind that this is a REIT, so there are certain outliers here, and I had to remind myself that because some of the things that they report on, or some of the the data points that they give, are very volatile when compared to a company like an Apple or a Google. So very different makeup. But revenue is up with Public Storage and still climbing. So revenue growth in the green, love to see that. Net income in the positive. It is down from 2022, which was a tremendous year for them, but still up every other year. Other than that, when we look at their balance sheet, um, we have their cash equivalents have gone down from 2021 and 2022. Their cash growth, unfortunately, has gone down because of that. Total assets has increased as well as total liabilities. Okay. And then their debt growth. Unfortunately, their debt growth has increased a little bit here. Still small in comparison to their previous years, which some years ranged almost 400%, which is insane. But again, we are looking at a REIT company or a REIT investment, I should say. Cash flow, net income, still in the positive, similar to that number that we mentioned before. You know, 2022's outlier, still above 2021 and down. Okay. One things that I typically look at are retained earnings. And retained earnings, I believe, I look back at the balance sheet here, retained earnings was in the negative. Again, that's one of the outliers with the company and the sector that we are speaking about currently. Okay. Acquisitions, they're in the negative for acquisitions. My assumption for this is because they've had a couple acquisitions in the past and potentially paying for those currently in the year of 2023. And their operating cash flow. Operating cash flow has been in the positive and steadily climbing as well. When you look at dividends for Public Storage, dividend yield's pretty hefty, 4.6%, a little bit over 4.5%. Annual dividend deal's $12, so think that's a very even number. It's about $3 per share per quarter. Not bad at all with that. Dividend growth, decent, 33%. Their payout ratio, again, another number not to look at. Well, you could look at it, but if you're basing this number off of regular, quote unquote, regular companies, this number is always going to be over 100%. This is common with REIT or real estate investment type companies. If this was a payout ratio for like a Google, an Apple, Nvidia, what have you, I would not be holding them. I would not be investing in them because they're essentially paying out literally everything that they've put into the company, so to speak. But again, this is a REIT company. They pay out shareholders yield. They pay out dividends. So this is a common payout ratio here. And you can see they've had a good track record on their dividends. They are a dividend aristocrat because they've increased their dividend since 1992. So, again, I wanted a little bit exposure to the REIT side with Public Storage, and I figured it was quote unquote the safest, as well as Federal Realty. And, you guys saw I don't have a lot of REIT companies, but I feel as though, when we speak about track record, Public Storage has a pretty good track record, and I feel very comfortable with that company in my portfolio. So with that being said, we will wrap this video up, guys. If you like the video, feel free to subscribe, like, comment. Let me know if the video was up to snuff, if you will, and if anything else you want to see or you want me to include in the video. And if it's helped, fantastic. With that being said, guys, thank you and happy investing.